It's such a pleasure to have you, Helen. We would like to just inquire, we're obviously at the SAD Finance Forum for 2025, and you were one of the panelists. We really just want to get an insight in terms of your thoughts on sustainable finance within the SADC region.
Okay, thank you. I think first of all, thankful to Bankers Association of Zambia for giving me this opportunity to represent, particularly given some of the work that Stanbic Bank has done around sustainable finance. So we've had a couple of years of running and closing deals in this sector. And the thoughts that come, first of all, this is the inaugural SADC Sustainable Finance Forum. So a pleasure to be here. And being an inaugural, it was a great forum to bring together representatives from bankers associations in the SADC region. What comes to mind is, firstly, we're all facing the same issues. A lot of those issues are around areas of taxonomy, agreeing on guidelines, having some fundamental similarities between different regions that can allow for cross-border lending, etc., dealing with different regulatory regimes across the sector, and just the agreement that some fundamental issues need to be harmonized if we're to grow to the sector quite rapidly. I mean, right now, Africa attracts about 4% of all renewable financing, and that is a dire situation to be in, especially given the impacts of climate on Africa, which is disproportionate to our contribution to the adverse effects of climate. So, I mean, we contribute less than 4% to emissions globally. So, addressing the issues around sustainable financing, in our case, as in Zambia, we've accelerated this, particularly because of the emergency we faced, but also it needs to be seen as something that becomes BAU. It shouldn't be a niche type of financing. It should just be the right way to do things, because sustainable it's not just looking at energy and renewable energy. It's also talking about impact on our societies, impact on growing our societies through the development that comes with the sustainable finance. Those are the things that we should be measuring. We should be measuring not just the addressing the climate issue. We should also be looking at addressing what is the impact on our societies. So I think those are some of the nuances that came out. We're speaking different with the different players, and also the fact there's so many innovative ways of distributing finance. And some of those learnings that have come from my other colleagues are things that we will be sharing, and through the sharing we can realize in getting some of these hurdles that we have in getting across funding into areas of sustainability.
Thank you so much for sharing that, Helen. That was incredibly insightful. As one of the panelists, we just wanted to hear a little bit about some key points that you discussed during your time.
Okay. With the key thing in my segment was to talk about case studies, because we do a lot of talking. There's a lot of forums that we all attend forums, but when you actually hear case studies of successes, it really then brings it to the fore that you can actually achieve things that may look unachievable. So I spoke about our Stanbic Bank's participation in the CEC Renewables issuance for the project finance for the solar project that was closed last year, and how we participated in terms of being the lead arranger and fully underwriting to ensure that we got financial close on that project. And this is also riding off the back of regulatory change. We've seen guidelines coming out of Bank of Zambia as well as the Securities Exchange. So once the regulatory framework, the policies are conducive to developing the financial sector, we will see things done. And I think the CEC Renewables bond issuance has been a classic example, the first green issuance in Zambia, and we're very proud as Standard Bank to have been part of that. I also spoke briefly to a case study around the Kafue North Bank Extension solar project, 100 megawatts, the largest in this part of Africa if you exclude South Africa. So major achievement in addressing the the energy shortfall that we have in the country, and also in diversifying the energy supply in the country. We're so reliant on hydro, and as we've seen with the drought, hydro impacted, agriculture impacted, and they are all intertwined. So it's about finding solutions to address that, mitigating the risks for the suppliers of finance, and innovative ways are coming through, including the opportunity to trade on the Southern African power pool, working directly with the direct off-takers so that we can put together strong propositions that can allow more energy to come onto the grid and stabilize the grid as well. And the more energy we get on the grid, it's not just benefiting those large corporates and mining companies, but it's also benefiting the wider country and communities, allowing the SMEs who would otherwise have not had the power supply, by making sure that we secure their power supply. It all trickles down to everybody in the environment. 90% of our economies are SME run. So if we are not able to support them, it's disastrous for our country's growth ambitions.
Thank you so much, Helen. It's such an honor to know that you're representing Zambia within this context. This is Tate Kuyana from Financial Insights. Get to know.
Get to know.
I looked after a couple of mines, Barrick, Kansanshi, and Sentinel. So there were key learning in there, but it's a different ball game to the DRC. What prompted me to join the DRC was the opportunity for growth. And when you look at the DRC, the mining is somewhat different. The model is different. In terms of the kind of things that you concentrate on versus what you concentrate in Zambia. Here is largely, in Zambia it's largely asset driven. So in here, once you do assets, you do other things as well. Yeah, so there are different models. However, it's what helps us to grow. As Standard Bank, we've got expertise in mining sectors. We've got teams and pockets of excellence that we consult from, and this offers that particular opportunity for learning, but also as the value of obtained in Zambia for the last 12 years to then come and impact, help with my team here as well. It's a great opportunity. Yeah. So you reckon that there will be a lot of opportunities? No, there is a lot of opportunities right now. Yeah, I can. So we've done quite a number of things supporting our different mining partners. Unfortunately, I cannot go into details, but we've supported a lot of our mining partners, and we are proud of the work that we've achieved with them, supporting their growth, partnering in so many areas when they need to import, when they need to expand, and then we come as that strategic partner that can help them, manage all of these nuances. In Standard Bank, we say Africa is our home and we drive its growth. In DRC, I would say DRC is our home as a bank and we drive its growth. Standard Bank is in 20 African countries. So that speaks volumes to our commitment to the African dream. So with regards to DRC, the reason why we sponsor such events or are the main sponsors of such events is because we're a market leader. We are innovative and we set the pace. We are thought leaders. And the reason why we have this is to sponsor this is not only to come and meet, but to provide a platform for different partners. You're going to have mines, you've got people and companies that support those mines be here. We sponsor this primarily because we want to drive the growth of DRC by bringing different people to connect. There's no better place than a platform such as this for different companies. So there are people that produce equipment that want to sell it to the mines. Where can they find the mines? Easily. This platform. There are people that transport minerals from Zambia, from DRC to Zambia to Zimbabwe to Durban, or from DRC through Zambia, Tanzania, or recently from DRC to the Lobito Corridor all the way to Lobito. Okay, so the only platform that is available and I think provides excellent communication and networking is this. So as Standard Bank, we do recognize the importance of such a platform. Hence, we sponsor this to provide that so that different markets, not just Standard Bank that is benefiting here, many other banks as well, many other mines as well. Okay, the port is big for all of us to come and do business here. I attended this same event last year, and personally, I think this year is like 10 times much better than it was, with our partners, VUCA, the organizers, Standard Bank, and many other partners, because we didn't pay for everything as a bank. We synergized with, sometimes there's a lesson we need to get. We should know when to compete and when to collaborate. And in this particular scenario, it's an opportunity to collaborate. So the sentiments I'm getting with our different partners that we are collaborating is they are happy in terms of the organization, in terms of the meetings that we're having. It's not just a matter of sitting in a room with somebody, but start having that quality connection. So this is quite happening, and for me, I've been able to have meaningful discussions with our various partners that we work with. So pretty pleased that we sponsored this year's mining and metals meeting and all of that. Yeah. No, I mean the remaining part is just to meet, to follow up on the different discussions that we have and actualize on the different opportunities that have been brought here, help companies grow, the usual. So we want to be the preferred partner at setting up these meetings, but also to be able to provide actual solutions to our clients. So we are opening our doors. Anyone can come and talk to us at Standard Bank. And the most important thing that we've done this year differently is we've got different, because companies here are not just in DRC. Some of them are across the border in Zambia, some of them are in Cote d'Ivoire, some of them are in Dubai. So what we've been able to do as Standard Bank is to bring different partners that we work with. So we've got Standard Bank from Zambia, Standard Bank from Mauritius, Standard Bank from Cote d'Ivoire, so that we can, because we've got the same common partners, so we can discuss and provide solutions. We've met clients that we've extended that want to open up shop in different countries, and we've been able to point them to the right direction.
Hello everyone, and welcome to Financial Insight and to Financial Insight TV. My name is Clarence Chongo. We are here at Africa Works at Agora Village, and I'm delighted to be joined by Dr. 𝘋𝘆𝘆𝘀, who is the head of business development and new ventures at Greenco Power Services Limited, which is a member of the wider Africa Greenco group. Okay, and what we're discussing today is about the DRC Mining Week, which just closed off last week, and Dr. 𝘋𝘆𝘆𝘀 was the Greenco representative there. And so, yeah, welcome to Financial Insight, Dr. 𝘋𝘆𝘆𝘀.
Thank you, Clarence. It's good to be here with you.
Okay, so DRC Mining Week, I understand the theme was about celebrating 20 years of investment in mining in the DRC, focusing specifically on infrastructure and on energy security. The first thing I want to ask you is why Greenco was interested in being found at the DRC Mining Week, if you please.
Sure. Thanks, Clarence. Yeah, Greenco has been interested in the potential of the DRC market for quite a while now. And in fact, we're in the process of establishing an office there and getting licensed there to operate as an energy trader, much in the same way we operate here in Zambia, as well as Zimbabwe, South Africa, and and so our interest in being there was really to just get a better feel for the opportunity for a company like ours, to deepen some of the relationships that we already have with mining companies and other big users of energy there who who have approached us in the past about potentially supplying them. And we were also there to more or less, announce our presence to some of the other stakeholders in the DRC who might not be familiar with a company like ours. So entities that are developing renewable energy projects, for example, because we could potentially be off-takers of the power from those projects, as well as other stakeholders in the sector that just aren't as familiar with 𝘋𝘋𝘆 as entities in Zambia might be, for example.
Okay. So I understand that you did not specifically have like speaking engagements at the DRC Mining Week, but nonetheless, you must have come away with some key takeaways. So what were the highlights for you? What struck you the most during this conference?
Yeah, there were quite a few, I think, insights that we took away from the week we spent there. The first one, I think, for me was just how big that event is.
Okay.
I mean, it was a lot bigger than I expected it to be. It was very well attended. There were lots of international companies present.
Was it close to like mining in Dawa?
Not quite on the same scale, but not far behind.
Okay.
Not far
Great.
behind. Yeah, it was a very big conference, very well attended, lots of big players there, all the big names that you would expect to see at an international mining conference were present. A lot of other stakeholders in the industry were present. Companies that support the mines had a large presence there. So it was, my first takeaway was, this is a pretty big event. And I'm glad we were there. The other big insight for me was really understanding firsthand just how much power those mines need. Got to speak to a lot of mining companies who are operating in the DRC and got to hear from them just about the challenges that they face in getting enough power to sustain their operations. And the challenge for them is not only obtaining power, but it's also getting it at an affordable price. And for some of the companies, they also have an interest in ensuring that the power that they're getting is sustainable. And so that's another objective of the mining companies operating there. And then I think the third big takeaway for me was there is certainly a need for a company like Africa 𝘋𝘋𝘆 to operate in that space. There's right now no one is really aggregating different power generation sources and then offering that power to large users on a basis that is allows them to not put their balance sheets at risk, right? Right now, most of the mining companies that are operating there are doing most of these power generation projects on their own balance sheet. And what we can do as Africa 𝘋𝘋𝘆 is come in, offer them a contract for power that they don't have to recognize on their own balance sheet, right? And that's a big advantage for them. And that's an opportunity, or that's the role that we can play in that environment.
Hi everyone, we are on day 2 of the Africa Energy Forum, and as always we like to have candid conversations on the second day of the EnergyNet sponsored event. And I'm with one of our sponsors, 𝘋𝘊 𝘂𝘆𝑚𝑎𝑐ℎ𝑢𝑛𝑔𝑎, who comes from Stanbic Bank Zambia, from corporate investment banking, and we're just going to have a bit of a conversation about how the last 2 days have been, but most notably was in part the keynote speeches that were given on day 1 by the ministers of of Energy of South Africa, as well as one of the candidates of the African Development Bank presidency. And we'll just have some quick reactions around that. But without further ado, Kandu, welcome to this interview.
Welcome, Mola. How are you doing?
I'm doing great. It's so fun. It's so nice to bump into you in Cape Town. And yes, we are at Energy Forum 2025. How have you found the event so far?
I think this event is a wonderful event, and I'm glad to be here because obviously the issues we're facing back home, but I think this event is taking it to a much wider stage. It's not just Zambia's challenges, it's the challenges being faced by the continent. And as you know, look, Africa as a continent has a massive deficit from an energy perspective. And this conference is talking about how do we meet the needs of the African people and the growth targets that we have as a continent. We want to move forward. And I think one of the main things coming out of it, the theme is Africa United. We need to look within to solve the problems. We need to work together to solve the problems. So this conference is really, I think, something that's sorely needed. It's really important because it's bringing key energy players from across the African continent together to find solutions to the challenges that we're facing as a continent.
Right. Now, one of the things that I picked out from yesterday's opening remarks by the Minister of Electricity of South Africa, Ramokgopa, one of the things that he pointed out was the importance of investment in infrastructure. Yes. I think there's a lot of talk about getting solid grids, reinforcing grids, etc. Now, Zambia has had the PPA obviously backed by the bank, and I think in December there was some work that some of our viewers don't know that the bank was involved in. Out of the two deals, and maybe if you can just give us some background in terms of what motivated the bank, but how do they fit into some of these issues that, from a fiscal side, there's a push to ensure that, we continue to have investment in infrastructure around energy?
There is a need for investment in infrastructure. I mean, a lot of the conversations that we tend to have it's infrastructure in different places. So we have conversations around generation and increasing generation capacity across the continent. Super important because we do need more electrons on the grid. But you also need to invest in the transmission infrastructure. And I think the conversation is how do we improve the interconnectivity of the grid across the continent, but also how are we able to improve our ability to transport electrons from the generation point to where they need to be used. And conversations here are obviously taking place around the investment in infrastructure and improving that infrastructure, generation, transmission, distribution. But I mean, from a Standard Bank perspective, look, I'm sure you've heard this before. Our motto is Africa is our home, we drive our growth. And this is something we believe in, right? I mean, we're a Zambian bank, we're an African bank. This is our continent. We're not going anywhere else. So for us, we need growth in these economies that we operate in order for us to actually benefit and grow as a bank. So when you talk about the transactions, concluded, one most recently last month and another early, I think late in 2024, maybe the bank has not always been seen in the light of driving big infrastructural or economic driving transactions, but it's always our goal to have a positive impact on the economy and to actually deliver growth, because that growth is the growth that allows us as a bank to continue to thrive, and our people in the markets we operate in to thrive. So I mean, these two transactions, as you mentioned, most recently the Kafue North Bank Extension, 100 megawatt power plant financial closure attained in the month of May. This is fantastic. Look, Zambia's got an energy deficit, I think anywhere between, on any given day, somewhere between 1,200 and about 1,400 megawatts. And the president has set a target for our country of 1,000 megawatts of solar to be brought onto the grid this year, right? So work is being done behind the scenes to get these megawatts onto the grid. But I mean, this transaction is the first to reach financial close, and I think the largest outside of South Africa, the largest grid-tied solar transaction, solar plant, right, in the southern African region. So what this does for Zambia, of course, is it puts more megawatts on the grid. It helps us bridge the gap that we're facing currently, and the bank, I think, viewed this as something that had real material impact on the Zambian economy. And of course, for us, we thought it was something that we needed to be a part of in helping solve the problems that we're facing. So for us, it's really about finding solutions in a financially viable way, in a bankable way that can deliver growth and allow for economic activity to move forward, but in a way that is financially viable and doesn't add, I mean, that transaction in particular, adds no additional strain to the government and to the government fiscus. The other transaction you speak of is the Green Core emergency power deal that we closed late last year. That deal was, I think, really monumental for the country because it's the first time we've done something of that sort. we were able to import power at a time when Zambia was facing a massive deficit as a result of the drought, effectively drought-induced power crisis that we were facing. We were able to import power into the country at no cost to the utility, to ZESCO. So ZESCO was able to get power, distribute power to citizens and keep the lights on. And the mines and other critical industries were able to get power as well from that structure. And what that then did is it allowed ZESCO to get electrons out to users without spending any money. And then all they have to do is return this power in electrons later on at a later date. So it's a very clever structure that allowed us to get power in. But given the financial constraints that the utility was facing, it did not place any additional financial burden on them. And I think this shows, what the bank is ready and willing to do and capable of doing. I think if we come together, because this transaction brought the bank together, Africa Green Co from the private sector, ZESCO and the Ministry of Energy from the government side of things, if we come to the table and we work together, we think through solutions, we can actually get innovative things done that help us deliver for our people and for the geographies that we operate in. And I think I'm very proud as a bank and as a banker, and very proud as a bank, Stanbic Bank, Standard Bank, to be a part of these revolutionary structures that are actually helping move our markets forward.
I think for us at Financial Insight, one of the critical things that we're observing is that, Standard Bank has, continues to innovate around how you can finance, some of these deals. And I think these two are a testament to that. And do you see going forward that these sort of innovative ways of financing these deals, or rather structuring these deals, is the way to go, especially if we're going to onboard more solar or more renewable energy on our grids?
We've been in a position as a country, as you know, 2020, the Zambian sovereign defaulted on its debt, and it's made, I think, attaining financial close on these transactions a lot more difficult. Also, you've got a utility that is struggling. It's made it quite difficult to reach financial close on transactions where effectively it's the primary off-taker. So you've got a problem in that you need the electrons to come onto the grid. You need power, you need the generation, you need the transmission. But you also need to make them financially viable in a challenging environment. Right. So the kind of old approach where you simply said, well, we're going to sell it to the utility, or a single buyer model where the utility is the only buyer in the market, simply won't cut it anymore. And what that then required was for us to take a step back and look at how we can deliver these projects. How can we deliver the electrons? Because we still need them. Zambia is not going anywhere. Zambia Inc. is still going to exist tomorrow, and we need to find a way to allow Zambia to function and to continue to grow. And you had to look at the challenges that we're facing and find solutions to those challenges. So you have to be innovative. And I think the only way we're going to be able to hit the targets that we've set for ourselves, very, 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 very ambitious targets as a country. As I mentioned, 1,000 megawatts this year of solar onto the grid, but also 2032, I believe, it's a target of 3 million metric tons of copper. This year looks like we're going to get up to about 1 million, but you need to grow that number effectively by a multiple of 3, right? And you need power for that.
Absolutely.
How do we achieve that in the environment within which we operate? You have to be innovative. And I think it's the only way we're going to be able to deliver solutions. The solutions that we need is innovation and then thinking outside the box.
What will be your most important takeaways from this particular AEF 2025? And do you go back home with some of the conversations that you've had? Do you go back more optimistic in terms of the sort of direction that not only is the bank is taking, but in terms of the industry as a whole, in terms of some of the conversations that you've had that will actually allow us to see more electrons get pumped into the grid, more projects being financed through innovative ways like you've just talked about?
Really, I'm very excited. I'm looking into the future, and I see a lot of, I think, opportunity and growth. I'm quite proud to be from Zambia because everybody is excited at where Zambia is going and what's possible in our markets. So I go home having engaged with a number of different players from across the world, really, who are looking at our market and looking at opportunity in our market. And I think that bodes well for Zambia and the Zambian people, for growth in our market. And as you mentioned, this conference really is about, under the theme Africa United, Africa working together to solve Africa's problems. And when you get really some of the brightest minds in the power sector together in one place, the things that are being talked about that we intend to deliver, or that this gathering of people intends to deliver across the continent is really exciting. And I think it's a bright future for the continent, it's a bright future for Zambia, and I think we're just happy as Standard Bank to be a part of that and to help delivering that bright future.
Absolutely. No, 𝘋𝘙𝘊, thank you so much for speaking to us.
Thank you, Mola.
Yes, so you've heard it for yourself. We've been speaking to 𝘋𝘙𝘊, and we'll continue to cover the various activities at the 2025 edition of Africa Energy Forum right here in Cape Town. I've been 𝘍𝘪𝘯𝘢𝘀𝘆 𝘍𝘪𝘯𝘢𝘀, your host. Stay tuned for more insights and get to know.
Yeah, and I guess our role is very different. We're not building cross-border infrastructure, we're using it. And so our role in facilitating the infrastructure is more as an off-taker, as a user. If we're committing to buy power long-term from a generation project, then we can also commit to pay for the capacity on the lines required to evacuate that power. And in terms of regional integration, in the electricity sector, there is already regional integration. We have the Southern African Power Pool. It's been around for a long time. It just wasn't really recognised for a long time as being a bankable solution to sell power. And that's really what we've been trying to support, recognising that the old model that put single counterparty risk on a financially challenged customer was creating the problems. And so why reinforce that model when we've got this interconnected grid and the regional power market that power is traded every hour of every day? It's not a particularly deep and liquid market yet, but it is increasing and it works. And so we're the first market participant member of the Southern African Power Pool, so non-asset owning, we're a pure trader. Our main role, though, is to facilitate investment in new generation by being a more creditworthy long-term counterparty than many of the utilities. And we, in turn, mitigate our risk through that regional approach. We're building a portfolio of generation. So we're not building the projects, we're buying from all the expert developers out there. An example of that was the emergency imports that we structured into Zambia over the Christmas period last year, where we set up a finance co and raised debt to prepay for power imports, more than our customers needed. And so about a third of the power in real time was going to our customers, and about 2/3 was being banked. So flowing into the grid, supporting the general population during the time of energy crisis, and we received a credit for that. So once the water levels improved, we can then unbank that power. So sort of time shifting and working with what's there, and I think that's so important. Understanding the context, understanding what are the constraints, and then you can work together to address those constraints and bottlenecks and come up with solutions that work for all. We all need the utilities to be sustainable. We need the services that they provide to be appropriately remunerated on a cost-reflective basis. And there's so much work going on in that regard in this region at the moment. I mean, the opportunities are huge. And we continue to support the governments and utilities through that process as the guinea pig. So really for us to be able to operate in a country, we need to have a license which allows us to buy power locally and sell it locally, and if relevant also export. I think from a regulatory perspective in Lesotho at the moment that's possible. And then the other aspect is we need to be able to wheel the power from A to B. So that's to do with our arrangement with the host utility who controls and operates and schedules that power. So really those are the two main things. And it does vary significantly around the region, quite what the licenses look like. I mean, our licenses in each of the 4 countries where we're currently licensed all look quite different. And the ability for entities which are licensed in each country, their ability to join SAP also varies. And so we definitely don't have a level playing field at the moment. Some countries take different views to others. I don't think Mozambique is intending to change the framework to allow people to trade domestically. We're speaking to a number of projects that are embedded within countries similar to that, where we can still support, but we would need to be one step removed. So we'd need to buy at the border and have an arrangement with the utility who will buy from the doorstep of the project and pass it through. So there are ways to work around, but the more flexible it is, the better, really. So I'm fresh from the panel here at 𝘍𝘪𝘯𝘢𝘀, and it's been an interesting discussion. With everyone else on the panel being lawyers, the focus really got down to the fundamental nuts and bolts of how we avoid issues, how we deal with issues, and the importance of the collaboration between the governments involved in cross-border transactions. We tried to elevate that to the practicalities of using the infrastructure once it's there for the benefits of power trade, recognising that in terms of regional integration we already have SAP and the SAP markets, which, as you know, we trade on very actively every day.
The process that they do as a region. So the starting point from a country perspective in countries where we operate, whether it's Zambia or DRC, is that we start from a customer perspective. So we start with which mines, which domestic, what is the growth rate, what is coming up, is it processing, is it drilling, whatever demand is coming up, and then we sort of try to stack it up. From our perspective, we are even more granular, because when we're looking at an operation, we try to break that down. If it's an underground operation, between underground operation, what is the load? What is the load of hosting? What is the load of processing? And then we sort of add that up together. We come up to ourselves as a regional utility. What is our regional utilities demand? And then we use that to get their focus. And then we say, what does it mean to our grid, our own grid, and our own power sourcing strategy? And then we try and feed in. That will tell us which lines we need to expand by when. And then over and above that, to the extent that there is a load that is going up, then we start getting commitments for those whose loads are going up and they need to put up obligations, whether it's from a supply perspective or new build. Then we start signing, whether it's connection agreement, expansion agreements, to meet their specific requirements. Because look, we are not in mining, for example. If it's a mining operation, we don't want to take mining risk. We don't know what they've seen in their reports. So we want to make sure that we share the risk, because they're the ones who are telling us this is what they want to do. So from that perspective, we pull up that information and we end up with the information at a regulator level in country, and then that is aggregated into the SAP perspective. Now, a few probably wanted to share something which is just to highlight that there are twists and turns to these sorts of issues. And the example I'm giving is that when we started putting up the expansion of the DRC interconnector in the early 2000s, the expansion, at that time there was a lot of power flows from the DRC, most of which was coming to Eskom to offset the coal. And it's on that basis that we looked at a 15, 20, and at the time, if I look at those models now, we're actually showing that, look, there will be more expansion in the DRC, part of the Inga projects will also be done, and Eskom will be taking so much power. Midway down the line, the mining demand in the DRC just changed. The demand just went up, and DRC needed to start pulling power, whereas the underwriting of the interconnector was on the basis of flows from DRC to South Africa. That's just changed 360, and now everyone is talking about, can we push more power into the DRC? So whereas the planning is very good, I think in the long term, we've seen that dynamics change. They'll still use the same assets. We still need to expand. And it probably goes to test that regional integration, whichever way the flows are going, is necessary, and that from an investor's perspective, we'll always get value for the investments that we make.
That's interesting, wasn't it? You never predicted this, but that asset is actually going to be used to which direction the flow will be. Please.
Hi, my name is Harriet. I am a partner at May & Company in Zambia. So my areas of expertise are energy, infrastructure, and extractives. I am attending the AEF conference in Cape Town. And I'm from a very interesting lunch at 𝘍𝘪𝘯𝘢𝘍𝘍𝘓, where we discussed the regional integration of energy and sort of looked at ways to achieve bankability for projects primarily in Africa and in Southern Africa. And major takeaway was how to achieve bankability in Africa. And the lesson there is we should do away with the utility and incorporate the Southern African power pool and bodies of that nature, as well as private off-takers.